Hi, my name is Professor Brett Frudenberg from Griffith University. I'm one of the clinic directors at the Griffith Tax Clinic. This presentation is to give you general information about some of the tax considerations that you should be thinking about if you're thinking of becoming an Uber driver. First and foremost, I'd like to acknowledge the traditional custodians upon the land on which I'm presenting. For me, that's the Yagara and Turrbal people. I pay my respect to elders past and present, and I extend that respect to all Aboriginal and Torres Strait Islander people. Now, the gig economy has many implications for many taxpayers in Australia. There's estimated there's about 250,000 people working in the gig economy, and many of them are doing it part-time and may have other sources of income. Now, this is really important to consider in terms of your potential tax considerations. Also, approximately 2/3 of Uber drivers are immigrants. And so it's important for those recent immigrants to have an understanding about Australia's tax law and the regulatory environment, because the tax obligations may be different in Australia compared to your home country. So what are some of the tax considerations you need to consider? Well, first and foremost, an Uber driver is regarded as carrying on their own business in their own name, and essentially treated as a sole trader or a contractor. So this is important. As an Uber driver, you're considered as carrying on your own business. What this means is that you need to apply for an Australian business number, which is known as an ABN. Because if you're conducting a business, every business needs to have one of these. In addition, you'll need a tax file number. Because you're a sole trader, an Uber driver will be using their own TFN. Uber fares, as well as tips and bonuses, will be added to the Uber driver's individual tax return as assessable income, unless any GST liability. This will be added to their other income which they may earn from elsewhere, such as wages or interest income. And I'll work through a few examples coming up. In addition, Uber drivers must be also registered for the GST, the Goods and Services Tax, and this is regardless of this turnover. The reason for that is that Uber drivers are regarded as taxi drivers, and all taxi drivers in Australia must be GST registered regardless of turnover. And so you see there's a number of acronyms that you need to get your head around. You need an ABN, you need a TFN, and you also need to be registered for GST. One of the things that you'll need to do be lodging a business activity statement, also known as a BAS. These could be lodged every month or every quarter. When you're lodging these BASs, they'll record your GST liability and also potentially your pay-as-you-go instalments, which essentially is when you are prepaying your annual tax bill. Another form that will be needed completed is your income tax return, and that's done every year and generally is due to be lodged by 31 October if you don't have a tax agent. Of course, these can be done electronically or in paper form. So what are the taxes that you need to think about as an Uber driver? Well, there's income tax, and that's the tax imposed on individuals, as well as partners and trusts and companies, and it's worked out by calculating the taxpayer's taxable income for the income tax year. So that's the first type of tax that you need to think about. In terms of that, you can make pay-as-you-go instalments every quarter towards your estimated tax bill. Now, in the first year of being an Uber driver, you don't have to, it's not mandatory to make these pay-as-you-go instalments. But what that can mean is when you lodge your tax return for that first year of trading, you may have a tax bill shock in the sense that you've earned this Uber income and haven't made any pre-installments or saved up for your tax bill. You can voluntarily enter into this pay-as-you-go installments in that first year and start prepaying your tax bill. Or you could save it yourself in a separate bank account. Now, the other important tax that Uber drivers need to consider is the Goods and Services Tax, known as the GST. Other countries around the world refer to a GST as a VAT. So if you've heard of a VAT, well, that's very similar to what we know as a GST in Australia. And as I have said, that Uber drivers must be GST registered regardless of your income levels. you'll need to lodge a business activity statement to report this GST. So what is the income tax year in Australia? Well, it runs every year from 1 July to 30 June. So the 1 July 2021 to 30 June 2022 is known as the 2022 financial or tax year. So once the tax year is completed, you have until 31 October to lodge your income tax return. And in that income tax return, you'll declare all your income and claim any deductions you're entitled to. You may have a further date if you have a registered tax agent doing this for you. You'll lodge your income tax return, and then the Australian Taxation Office, the ATO, will issue you a notice of assessment, which may require you to pay tax, or you may get a refund of tax from the ATO depending on your personal circumstances. So we have the income tax year. But that income tax year can be divided up into monthly or quarters, particularly in relation to business activity statement, your BASs, as well as your PAYG instalments. So let's look at the quarters. There's 4 quarters in an income tax year. You have the September quarter, which covers July, August, and September. And so after the September quarter, you'll lodge your BAS and make any payments as appropriate in relation to that. And you have a few weeks to do that. Then you have the December quarter that runs from October, November, December. And then after a couple of weeks after that, you have to lodge your BAS and make your payment. Then you have your March quarter, which is January, February, and March. And again, a few weeks after the March quarter, you'll lodge your BAS and make any appropriate payment or get a refund if you're entitled to a refund in terms of your GST. And then your final quarter is a June quarter, which is April, May, and June. And again, you have a few weeks before you have to lodge your June BAS. I will go through those actual lodgement dates in a few moments' time. So that's the tax years and the lodgements that you may be required in terms of both income tax and business activity statements. Another thing to appreciate is the individual marginal tax rates. And so these are the individual marginal tax rates for residents in Australia. And you can see the tax rate increases as a taxable income increases. And for the first 18,200, that's known as a tax-free threshold, and there's no tax payable on that amount of income. But once you exceed that amount of taxable income, you can see the rate is either 19%, then 32.5%, and then 37%, plus then 45% for taxable income greater than 180,000. In addition to this, you might be liable for Medicare levy of 2%, which goes towards funding the public health system. Now let's try to understand the marginal tax rates. Some people get confused about how they actually apply. So how much tax would you pay on taxable income of 60,000? Well, that falls within the bracket of 45,000 to 120,000, which looks like 32.5%. Some people incorrectly think that the whole amount of the 60,000 will be subject to 32.5%, which would mean that you're nearly paying $20,000 in income tax. But that's not how the marginal tax rate system applies. Essentially, the marginal tax rate means that the tax rate steps up as the amount you earn increases. So what that means in terms of the 60,000, the first 18,200 you pay no tax on, so zero tax. And then between 18,200 to 45,000, you pay 19%, but only on those dollars between 18,200 and 45,000. So here, that'd be $5,092. And then it's just the amount over 45,000 that you would pay the additional 32.5%. And so that'd be about 15,000 times 32.5%, giving us about $4,875 in tax. And so your total tax bill in relation to the $60,000 is only $9,967, which is a lot better than that $19,500, which means if you average this, really overall your average tax is about 17%, plus then the Medicare levy of 2%. What people can get confused about is when you have a second source of income and the marginal tax rates as well. And this particularly can apply if your first source of income is in relation to wages. Okay, because when you are earning wages as an employee, your boss generally withholds tax from you and pays that tax over to the ATO. And by doing that, you're prepaying your tax as you earn your wages. So here we've got an example. Someone's earning wage income of $50,000 plus then $10,000 from Uber driving. So if we add that all up, their taxable income is $60,000 for the year. So again, if we look at those marginal tax rates, that falls within this bracket here of $45,000 to $120,000. And as we worked out previously, looking at those step-ups, the amount of tax that would be paid on that $60,000 is that $9,967. Okay, so that makes all sense. But how much income tax is the additional $10,000 essentially subject to? And now what I want you to think about is that really that first $50,000 from wages, well, that's taken up really 3/4 of your brackets in terms of your marginal tax rate. And so that means your boss, even though you earned $50,000, your boss wouldn't have paid you $50,000 into your wallet or your purse. Your boss would have withheld about $6,692. So you would have got about $44,000 cash in your bank account from that. That $6,692 is a prepayment that goes to the tax office. However, for the extra $10,000 you earn from Uber, Uber doesn't withhold any tax. And so that $10,000, when you add it to your already $50,000, is falling within that 32.5%, which means of that $10,000, there's about $3,250 in income tax that's yet to be paid. And so this is why it's so important when if you're earning additional income from Uber driving to really think about how much tax you might be subject to on that additional earnings. Because if you spend the full $10,000, you might get a nasty shock when you lodge your income tax return when you have to find that additional $3,250. And remember, there's a Medicare levy on top of that of 2%. So it's so important that you save up for your tax bill. You might open up a separate bank account to do that, or as I suggested, you might voluntarily enter into the pay-as-you-go installment where you prepay your income tax. But it's so important, whatever you do, to think about what your income tax liability may be on that Uber driving. So what is a business activity statement? Well, your business activity statements will report your GST liability as well as your PAYG installments once you do that, either voluntarily or in the second year of trading when it's mandatory. And essentially you will lodge your BAS every quarter, although you could elect to do it monthly if you wanted to. And in that BAS, you'll record your gross sales, so the gross amount you receive from Uber, the amount that you paid, the GST that's in your purchases or expenses that relate to your Uber driving, and also any other GST amounts you might have received on other sales. You can lodge your BAS either paper, like through a paper version, or electronically through MyGov, or through a tax agent and through their software. As I suggested previously, you lodge your BASs generally every quarter with the ATO, and if you owe money, you will also make a payment at the ATO at the same time. So it's important to appreciate that you have kind of two obligations. One obligation of actually lodging the statement, and also the second obligation of then actually making any payments that are required in relation to that. So if you're lodging quarterly, that September quarter, the BAS for that would be due to be lodged by the 28th of October. For the December quarter, that BAS would be lodged by the 28th of February. You get a little bit more time because over summer, many people are taking holidays. And so additionally, you kind of get an additional month compared to the other quarters. For the March quarter, you need to lodge that by the 28th of April generally. And then for the June quarter, that'll be required to be lodged by the 28th of July. So it's so important to actually understand and know when these dates are due, because you don't want to be lodging late and paying late. Now, in terms of taxable income, well, it's important to appreciate what makes up taxable income. Really two big components. It's your assessable income, then less your deductions. So another word for deductions may be your expenses, but it's only those expenses that are legally deductible for tax purposes. So let's look at what is assessable income for an Uber driver generally? Well, in terms of being an Uber driver, your assessable income would be the fares that you charge your passengers. Okay, and that'd be the gross amount that you receive from Uber. But in addition to that, if you get tips or bonuses for being a good driver, those would also be taxable in Australia. And also, if you've got income protection insurance and you had an accident and you made a claim under that income protection insurance, and so your insurance company is paying you money because you haven't been able to work, those payouts would be generally assessable income to you also. So your Uber driving fares will be assessable income. In addition to that, you might have wages as an employee from other job activities. You might have dividend income from owning shares. You might have some rental income, or you might have some interest from a bank account. They too will get added to your assessable income in your individual tax return. And so this is an example statement that you might get from Uber. And so there it's got your fares that you receive, the gross amount. Also, it's got your tips and referrals, okay? They get added to your assessable income. And then also, Uber may actually detail what some of your potential deductions are. Particularly, the commission that you pay Uber, generally that will be deductible. And also, it will record your actual Uber trips themselves. These will be your business kilometers. But the actual amount that you might be able to claim for tax purposes actually may be higher than this amount. And I'll discuss that, why that is possible. So you get this statement, which is a handy starting point in terms of what your income tax liability may be for the year. So let's look at John. This is a case study. We'll be referring to him a bit through this presentation. John has a job as an employee of Bunnings, but he's also signed up to be an Uber driver to earn some extra income. So John's received $25,000 in wages from Bunnings, $13,000 from Uber fares, as well as then $400 in tips from Uber passengers. And what's John's assessable income for the year? Well, it's actually the $38,400. All three of these amounts are assessable income and will be reported in John's income tax return for that year. Now, this is really important to consider. What are some of the possible deductions you could have as an Uber driver and when? It's so critical that you get this correct, because if you overclaim something, then you may be liable for penalties and interest for claiming something that you shouldn't be entitled to. So as a general rule, you'll be able to claim a deduction from expenses when it is directly related to the running of that ride sourcing business, okay? But penalties won't be. So you need a direct connection between that expense and you earning your Uber fares. Also, you need to think about, are some of your expenses, do some of them relate to Uber driving, i.e. business related, but are some of the expenses also relate to private things? If you've got an expense, say a telephone bill, like your mobile phone, where you use partly for Uber driving, but then also partly for private, then you need to apportion the amount of that, because you can only claim the business percentage as a deduction. The private percentage will not be deductible. So it's so important to think about that in terms of your expenses. Also, you have the obligation to keep records such as receipts to back up your claims. You might have quite a valid expense that you should be able to claim a deduction for, but if you do not have the records to back that up, then generally you're not allowed to claim that as a tax deduction. So the onus is on you to make sure you keep those records to back up your claims. So one of the important things to think about is travel. So for an employee, normally your travel from home to work is regarded as private. You choose where to live. And so courts have said that's private in nature. And that means for most employees, we can't claim a deduction between home and work. It's not deductible. But when you're traveling for Uber, when you're an Uber driver, that travel can be regarded as business travel and is deductible. But one must determine when you're traveling in your car, are you traveling in your car as an employee, i.e. going to your employment job? Or are you traveling in the car as part of your Uber business? Or are you traveling in your car for personal reasons, like to go grocery shopping or pick up your spouse or the kids or going on holidays? It's really important that you determine the purpose of your travel in your car, because that will be fundamental in working out if that is deductible or not. And sometimes it might be mixed purposes, which will mean that you might be only get a partial deduction. And it's so important to be honest and accurate in relation to this. One of the things I suggest that you do is keep a logbook. And I'll just talk about what that logbook will need to contain. So let's look at John again. John has a job as an employee in the city working at Bunnings. He drives to the city 10 kilometres to get to Bunnings. Is that travel he does of 10 kilometres, is that private or business in terms of just his employment? You got it. It'll be just regarded as private and not deductible. Okay, so John cannot claim a tax deduction for those 10 kilometres. On the weekend, John turns on his Uber apps and gets a job driving from Greenslopes to Kelvin Grove for 40 kilometres. Is that Uber trip private or business? Well, that 40 kilometres will be regarded as business travel and will be deductible for John in terms of that. How about this one? It's a little bit harder. John on Monday turns on his Uber app while driving to the city to his employment job at Bunnings. Okay, so he's driving to his employment work, but while he does that, he turns on his Uber app. He doesn't get a job, and he just goes and parks near Bunnings. Is this travel private or business? Because he had mixed purposes, didn't pick up an Uber job, he will be regarded fundamentally as driving to his employment job. And as we know, well, employment, that travel is generally private and not deductible. So he won't be able to claim a deduction for that travel, even though he had his app on. What about in this example? On Tuesday, he turns his app on again while driving to the city for his employment job at Bunnings. But this time, on the way, he gets an Uber job and travels 20 kilometres for that Uber job. And then once he drops off the passenger, heads back to the city. Is this travel private or business? To the extent of that Uber trip, that 20 kilometres where he picked up that passenger and dropped it off, that 20 kilometres itself would be regarded as business and deductible. But all the other travel would not be regarded as deductible, be regarded as private because he's going to his employment job. And so here we have a mixed purpose in terms of that travel. And it's only the actual Uber trip itself, the 20 kilometres, that is deductible. Okay, and so this is why it's so important to keep a logbook to try to record what's occurring. Also, it's so important to understand what's your purpose of travel. In these examples, John's purpose of travel was mainly to get to his employment job. And because of that, it's only if he gets an actual Uber job that that part can be deductible. So what are some of the expenses that are tax deductible? Well, your mobile phone in terms of, running the Uber app when it's used for business and not personal. Generally, you'll have to make an estimate of the business use, okay? Some Uber drivers may prefer to keep two phones, one phone purely for Uber. And so that expense will be fully deductible because it's only used for Uber driving. And then keep a separate phone for private calls. And so that separate phone will not be deductible. But if you use the one phone for both, then you need to apportion it and try to work out what is the business use. Fees or commission charged by the platform, charged by Uber, well, those fees will be deductible for you because they directly relate to you earning that Uber income. Also, petrol, oil, car washes relating to the business use of the car will be deductible, but to that extent that you use the car for business use, for the Uber driving. If you don't own your car and you're paying lease payments towards that car, then part of those lease payments could be deductible as well, to the extent that you're using that car for business purposes, for Uber driving. Also, if you provide your Uber clients with bottled water, mints, tissues, newspapers, well, to those clients, those will be deductible. But if you eat the mints or you drink the bottle of water, then to that extent, it's not deductible, okay? Because if you consume it, then it's not deductible. It's only if the customers of Uber consume those things. If it's for them, then it is deductible. What other things can be deductible? Well, wipes, sanitizers, and an antibacterial spray provided for passengers and used to clean your vehicle for Uber driving. Okay, so it's again only that when you use it for your Uber driving. If you use it for your family to get in the car, then that would not be deductible. Car parking fees. Okay, so if you have to pay a car parking fee to park for a couple of moments and you have to pay a fee, then that would be deductible. But don't get confused between car parking tickets or fines. If you park in the wrong area and you get a fine, well, that car parking fine will not be deductible. Okay, if you get a fine or penalty, as a general rule, that's not deductible. If you own your car, then you may be able to depreciate it. Okay, and that again depends on the business kilometers that you use. Also, under recent provisions, sometimes you might be able to claim a full deduction rather than depreciating, but that depends when you bought the car. Also, it depends on the business usage of that car. And so it's important, we'll talk about the business kilometers and how you can track that through your logbook, because that affects that. You will not be able to use depreciation if you use the cents per kilometer method that I'll talk about later. What other things are deductible? Road tolls and fees, provided the passenger doesn't pay for them. If the passenger pays for them, then it's not deductible because you haven't had that expense. If you have to pay insurance, car registration, and application fees in relation to the car, then that will be deductible, but again, to the business percentage use of the car. If you use the car only for Uber driving, then that would be all deductible. But for many, they probably use their car partly for Uber driving and partly for private. And so therefore, you're going to have to proportion these amounts. If you need to get a medical test to prove that you can drive, then that will be deductible. If you have to do also a police check to prove that you're allowed to drive, that would be deductible. If you pay an accountant or tax agent to help you do your tax returns or your BASs, that will be deductible. And then car expenses, depending on the business kilometers, will be deductible. Now you have two methods that you potentially can use. You've got the cents per kilometer method, which is essentially a cents rate that you're allowed to claim per business kilometer traveled for the year. But there's only a maximum of 5,000 kilometers that can be claimed under that method because it's quite simple. Okay, but if you drive for Uber for more than 5,000 kilometers, then you might want to actually keep a logbook and then determine the business percentage of that travel. Okay, and then use that, apply that against the relevant car expenses as well as the depreciation. These following things will not be deductible. Okay, so it's so important to not claim a tax deduction for these expenses, even though they might seem that they're related to you earning your Uber fare. Clothing. Clothing is normally private in nature, and so that will not be deductible. Okay, unless you've got a registered design, clothing will not be deductible. Food and coffee and drinks that you, the driver, consume won't be deductible. Even though you might need caffeine to keep you awake in terms of driving, that is private in nature and not deductible. Parking fines are not deductible. Speeding fines are not deductible. Maintaining your private driver's license, not deductible. The private use, the private proportion on your mobile phone, not deductible. The private travel in your car, not deductible. Okay, and this is why you need to keep this logbook to work out what percentage of your car is private and what percentage is business. It's so important that you keep these records. Okay, so let's revisit John. John has a job as an employee in the city, as we know. He parks in the city to get to Bunnings and pays $40 for this parking fee. Is that tax deductible in relation to his employment? No. Okay, and this is when, when you're traveling for employment, generally for most of us, it's not deductible when you go to your main place of work. Okay, and so John cannot claim $40 as a tax deduction in relation to parking at his main job site of Bunnings in the city. However, on the weekend, he turns on his Uber app. He gets a job driving from Green Slopes to Kelvin Grove. But while he's waiting for his passenger, he has to pay for car parking. And that is a $5 fare for that in terms of that car parking fee. Is that car parking fee in relation to his Uber client deductible? Well, yes, because it relates to his business expense of his Uber fares and is deductible. Okay, so you can see how, depending on the circumstances, that car parking may be deductible when it relates to your Uber driving. Again, it's important to keep these receipts. John on the weekend turns on his Uber app and gets a job driving again from Greenslopes to Kelvin Grove. He's trying to get his client there quickly and he accidentally drives too fast and gets a speeding ticket of $400. So this is while he's driving for Uber. Is that speeding ticket tax deductible? Well, the answer is actually no. Even though it relates to his Uber driving, the legislation really specifies that you can't claim a deduction, a tax deduction for fines and penalties. The idea being is that the government does want to encourage people to do wrong things, i.e. get fines and penalties. So if you get a fine or penalty, generally not tax deductible at all, even though it may relate to your business. Now, in terms of your car, if you purchase your car, generally you would be able to claim depreciation on that car to the extent of the business use. However, currently there's some instant asset write-offs that give some temporary full expensing, okay? And that may mean that you claim the full amount of the car depending on how much you use it for Uber and private. However, there's a limit on this. There's what's known as a luxury car limit, and currently that's about $60,733 for the 2022 income tax year. Basically, the government is saying, look, yes, you might be able to claim a tax deduction in relation to cars, but you're not going to claim a tax deduction in relation to a Lamborghini. So essentially they're saying, look, as a rule of thumb, we'll let you claim a tax deduction up to about $60,000. But again, you've got to work out, remember, the business percentage of that. Okay, and so, you know, for example, if the Uber driver uses the car for 70% business use, then you can only claim 70% in terms of that instant asset write-off. Okay, so it's so important to think about what is the business use, as well as keeping in mind that luxury car limit. So if your car costs $100,000, you can't claim that. You can only claim 70% of, say, the $60,733. Now, as an Uber driver, it's really important for you to consider the GST, because in addition to income tax, GST will apply to you as well. Now, as I stated previously, from day one, if you're driving for Uber, you must register for GST because you're treated like a taxi drivers, and all taxi drivers in Australia are GST registered. This GST registration is in addition to registering for your ABN, your Australian business number. And that's so important. So many people think that if you have an ABN, you're necessarily GST registered. They're actually two distinct things. So being an Uber driver, you do need an ABN, but you also, in addition, need to register for GST. And you can do that on the following website. Note, Uber Eats is different. If you are just doing Uber Eats, that's not a taxi. And it's not mandatory for Uber Eats to register for GST, provided their turnover is less than $75,000 per year. If you're doing Uber Eats and your your fares, your business income is greater than $75,000, then you must register for GST. But if it's under $75,000, it's optional. But for an Uber driver, you must register for GST. Again, it's so confusing, isn't it? You got to think about, am I an Uber driver or am I doing Uber Eats? Because when you take passengers, that's like a taxi, and taxis have to GST register. Where if you take food, that's not like a taxi, and so the rules are slightly different. So when you're an Uber driver, you're GST registered, that means you'll be liable to pay to the tax office 1/11 of what is charged as GST. What that means though for income tax purposes is that your income for income tax purposes will be the GST exclusive amount when you lodge your income tax return. Let's look at the case study to try to make sense of that, because it is quite confusing. Okay, so John charged $21,000 in Uber fares. What's John's GST liability? Well, the GST liability 1/11 of the Uber fare, so $2,100. For income tax purposes, his income from Uber will be exclusive of that GST amount because that's not his money. He's had to pay that to the tax office. And so his income will be the 21,000 less the GST of 2,100, meaning the amount of income he puts in his income tax return is $18,900. Okay, that's a lot to get your head around. Okay, and this is where you can think, I'm just trying to do some Uber driving to earn some additional cash, but it's so important for you to have an appreciation of both the GST and income tax consequences of doing that Uber driving, just so you don't make mistakes and you don't have a headache later on. Also, the GST affects what you can claim as a tax deduction, because when you're GST registered, what that means is that you can claim back some of the GST in your business purchases that you've made. So, there'll be GST in the petrol that you fill your car with. And so you can claim back some of that GST in those expenses. If you're claiming that GST credit, that then affects your income tax deduction, because your income tax deduction for income tax purposes will be GST exclusive when you lodge your tax return. Again, confusing, I apologize. Let's look at the case study with John and hopefully that will make sense. So John's made a repair of $5,500, including GST, for his Uber car, his asset. And this is all used for business purposes, 100%. We're just keeping it a nice, simple example. What amount is the GST input tax credit that he can claim on his BAS? So essentially, when you claim a GST credit, you're getting money back from the tax office. But then what is his amount of income tax deduction in relation to that repair? Okay, so his GST input tax credit will be 1/11 of 5,500, so $500. So essentially, he'll get $500 back from the tax office when he lodges his BAS return for that quarter. But what it means that his income tax deduction will be less that GST credit that he got. So it'll be 5,500 less 500 to give $5,000 tax deduction. So you can see his tax deduction is not 5,500, but just 5,000. Now this is so important for you to understand, because when you look at your receipts, it might just have 5,500. And so when you're filling in your tax return, you think, well, that's the amount I claim a tax deduction for. But if you've been able to claim back the GST in that expense, then your tax deduction is the net amount, i.e. 5,000 here. Again, it's so critical that you don't do silly mistakes when you look at the GST and the income tax interaction here. Now, how does private usage of your car and other assets affect your deductions? We've talked about this, but let's just do another example to also think about how it affects your GST credit. So here, John spent $220 per month on his mobile phone plan. And he has estimated that 90% of this mobile phone is used for business use. There's GST in that $220. So what's the GST credit he can claim when it's only 90% business use? Then also what's the income tax deduction can be claimed when it's only 90% business use? So firstly, the GST component will be 1/11 of 90% of 220. Either 90% is the business amount, which means that the GST credit is $18. If it had used this phone 100% for business, then the GST input tax credit would be 20. But because it's only 90% business use, his credit is not $20, but $18. In terms of his income tax deduction, rather than being $200 net of GST, it'll be $180. And that is the $198 net of GST less the credit he's claimed will give $180. So again, it is very confusing, but it's so important to get these right, because your income tax deductions will be net of GST, but also then just the business percentage that relates to that. And so it's so important to understand that. Another thing that is important to reflect upon is superannuation. Now, another word for superannuation is retirement savings. And so in Australia, we refer to retirement savings as superannuation. Now, as an Uber driver, you're not an employee of Uber. So what that means is that Uber does not pay super guarantee. And so Uber drivers themselves must think about putting money away or making contributions into their own superannuation in terms of their retirement. Now, in our example, John was also working for Bunnings. As an employee of Bunnings, Bunnings would be paying the super guarantee, but in relation to his Uber fare, Uber will not be. Okay, so John could make his own contributions into super, and it's possible potentially to claim a tax deduction for those super contributions. However, there's caps or limits in terms of the annual amount that you can make into super and claim a tax deduction. Okay, so in terms of claiming a tax deduction, one limit that you need to appreciate is a concessional contributions cap. And for the 2022 year, that cap is set at $27,500. And contributions that will count towards that would include super guarantee amounts, salary packaged amount to super, and your own contributions if you claim a tax deduction. There is some averaging that's available as well in terms that affects these caps. If there's no deduction claim, then the relevant cap is known as a non-concessional contributions cap, and currently for the 2022 year, that's set at $110,000. Superannuation is quite complicated and confusing. You should start thinking about it though, and really seek professional advice in relation to it. So what do Uber drivers need to keep track of? Well, the thing is, records. You need to keep track of records for deductions. And the onus is on you, okay, that you've had the expense. You need to be able to explain why it's deducted. You might have a diary, given in terms of recording, say your phones for a number of weeks to say, yep, my phone's used 90% in terms of business, and how you determine that percentage, okay, if partly. And it's important that you are honest and, in terms of this, because, a lot of the times there will be expenses that are partly in relation to Uber and partly private. It's important that you've worked out exactly. Now you can keep these records electronically, and generally you need to keep them for 5 years from when you lodge your tax return. The ATO has created a free app to help you actually take photos and record these. Now this app's really handy because you can download it on your phone, and then when you have a relevant receipt, you can upload it to the app. And so at the end of the relevant tax year or the end of the relevant quarter for your business activity statement, you've got a record of what are some of the expenses and income that you've had for that relevant time period. So here's a picture of what the app looks like. And it's got like my deductions, it's got tax withheld calculator, an ABN lookup. It's even got some business performance checks, tax rates, and tax rate tools. In terms of your Uber driving, you'll be set up as a sole trader of records, and you'll select that option in terms of how you want to keep your records. And then you can add new, and then you can actually add a photo, the amount, the transaction date, and a description. And it's better to try to be more descriptive as you go along, because that will help you later on to say, oh, yep, that expense was like that. Also, you can dictate whether it's 100% claimable or not. Okay, and this again, be honest in terms of these expenses. If it's partly claimable, then just indicate that it's not fully claimable. And then maybe in the description, put your estimate of what amount is deductible in terms of the business use. And then in terms, the other things you might want to record here is work-related travel, interest deductions, gifts, and those type of things. So again, you can actually collate a lot of information in this app. Now, the information in this app is actually held independently of the ATO. They don't have access to it, okay? They're just trying to help taxpayers do the right thing. Now, an important part that you need to keep is your logbook, okay? A logbook is a record of your car usage, okay, as evidence of your business use. The logbook helps tell you what percentage of your car expenses are tax deductible. Now, you should keep a logbook for at least a continuous period of 12 weeks. Probably 13 weeks is best, just to be safe. You can choose which weeks you keep this logbook, but it should generally be representative of your use of the car. You only need to make one logbook entry for each shift or session. Okay, you don't need to record individual delivery if your sole reason for being in the car is the actual Uber driving. But if you've got multiple reasons, then you'll need to actually record just the Uber trips. Okay. And so here's an example of one of the Uber logbooks examples where you keep the odometer reading from start to end, and that gives you your business Ks there. Also, the ATO app actually has a logbook there, and you can put in your registration, the type of vehicle, and then you can add and start your logbook down the bottom, or you can add individual trips. Okay, and so if you start your logbook, this is what it will look like. It will ask for the date, ask for the odometer, start and end, and then we'll calculate that, and also the closing date for that. So there's an easy way to record your odometer reading in terms of the business kilometers that you traveled in your car. Now, when you're thinking about business kilometers, as a rule of thumb, it's important to work out why you're in your car. Now, if the sole reason that you're in your car is to drive for Uber that day, then your business kilometers start from when you leave home, okay, and end once you get back to home, okay, as well as then all the trips in between. That is if the sole purpose of you being in that car is to do your Uber driving. Now, if you have mixed purposes of being in the car, so you may be driving to your employee job, or you might be, also picking up your spouse or child, you might do some grocery shopping or getting some lunch, then if you've got these mixed purposes, then generally as a rule of thumb, it's only the kilometers of the Uber trip itself. So again, it's so important to work out from the beginning, why are you in your car? If it's for the sole purpose of Uber driving, then generally it'll all be business kilometers. If it's mixed purposes, then generally it'll only be the Uber trips themselves. Okay, where can you go for friendly, free tax help? Well, the Griffith Tax Clinic is part of the National Tax Clinic program and is a student-run clinic where community members can get free advice from university students under the supervision of expert tax practitioners. You can get advice in terms of thinking about becoming an Uber driver, how to complete your tax return, or maybe if you're dissatisfied with an assessment, being able to negotiate with the ATO on your behalf, or respond to a notice or negotiate a payment plan. Eligibility is open to people who are currently unrepresented. You don't have a tax agent. You live in Australia and either you're an individual or a small business entity. The Griffith Tax Clinic is located on our Logan campus near Springwood, and to register your interest, please go online. Just Google Griffith Tax Clinic and you'll find the online application form. Please fill as much details as possible and that will flow through to the tax clinic and then we'll contact you. We operate all year round and we can do client interviews via the web as well. But our preference generally is for the first client meeting to occur face-to-face. I hope you found this video of some value. Earning some extra income is really useful. But as an Uber driver, it's really important that you have an appreciation of the income tax and GST obligations that you will have. Also, it's important that you start saving for your income tax bill. The Griffith Tax Clinic, we're here to help. Thank you.